The melt up in stocks is real. Our latest piece is all about the mega rotation into small cap stocks. I'm sure you guys have heard breadth has been thin, but you know what? That is changing in a big way. Let's get to the data. So if you want to know, is breadth getting better? Well, just look at the big money index. You can see it is starting to perk up. Why is that? That's because stocks are getting bought in a very, very big way. So look, the media is talking about stocks that are breaking out. Look, we've started seeing this in the data starting on June 1st. In fact, it is the most buying that we have seen since February. So this is actual very bullish data. And then you want to know where all of that buying is? It is in small caps. Consider this. This is from June 2nd through June 7th. 488 stocks were bought, only 52 were sold. But look at this. The lion's share, it's in market caps that are sub 50 billion. Those were the areas that were left for dead. And you want to know what? Those are actual stocks. A great chart that I was able to find is just the disparity between IWM, that's the Russell 2000, and the NASDAQ 100 triple Qs. Almost a 500 basis point spread over a few days. You know, you hear how if you miss some of the best days in the market, you underperform. These are some of those days. But always remember, there are great areas to go fishing when there is big buying. We really like discretionary stocks, right? That has been the second highest ranked area all year in Map Signals data, just behind technology. And what happens when you see a big surge of buying? Holy moly, you start to see stocks that are up many dozens of percent. So this is a top 20 report. Obviously, I've blurred out a lot of the names, but look at this. Retail. And here we are, we see tons and tons of stocks. They are up big time. The bears don't like to hear that, but let's also go over one more narrative that you guys need to know about. And that is going to be technology stocks. Alec, he is our macro strategist. He says earnings growth is going to continue to fuel the tech rally. A lot of people are like, oh my gosh, I am worried about AI and maybe there's some hype. Listen, there is some hype, but you got to focus on outstanding stocks. So here we are, we're looking at the top ranked groups. Like I said earlier, technology and discretionary, they reign supreme. But check this out. Why are stocks going up? It's because earnings growth continues to accelerate. There is no better way to see this than in this awesome chart. So tech rally driven by superior earnings momentum. So in red, we've got the S&P 500. This is the percentage change, 12-month forward EPS. In blue, communication sector, and in green is the tech sector. Just look at the spread. Tech and communications, those are some of the strongest groups year to date. And you can see why. It's because earnings are accelerating. And if earnings are accelerating, stocks are accelerating. Let's keep going. This is even better. Tech's profitability is so much wider than the S&P 500. I mean, look at this. You want to know why these stocks are under heavy accumulation? It is because profits. Okay, that is why you buy stocks. For big fat profit margins. Techs, stocks, they reign supreme here. So how do you play it? You can look at triple Qs. This is the ETF that holds the 100 NASDAQ biggest stocks out there. But you know, we are all about finding outlier stocks. We talk about them all the time on this show. Get a Map Signal subscription. Don't be stunned like the crowd is right now. This is a huge bull market. I will see you guys next time.